Hello, my name is Carla Cardavera. I am one of the managing partners at UpFront CPA. And today I would like to speak to you about mid-year financial review and why every business owner needs one. And let me tell you upfront, businesses that are successful do this every single year. So please listen very, very carefully. So most business owners only look at their numbers during tax season, which is not good. There is no planning around it. So we definitely do not recommend that. As advisors, we do not recommend that you only look at your profit and loss, or that you look at your tax returns to use it as your financial statements or as your profit and loss for the prior year. So by then, if you wait until you prepare your tax returns, many financials and tax decisions cannot be made at that time. It is simply too late. So a mid-year review is your opportunity to look at the projections for the rest of the year and make decisions at that time. So question, if you don't stop to evaluate your business, how do you know you're still headed in the right direction? So it is July. It is the perfect time to run reports, to understand your financial statements, to understand the story that they are telling you. And right now, you still have plenty of time to make decisions. What needs to be changed? Where can I do better? Where do I need to improve? You have to make sure that you understand and that you're reading your profit and loss specifically correctly. And you can sit with your advisor to go over that 100%. That is actually what we recommend, because as we have the experience based on other businesses that we see as well. So there are ideas that we can explain to you what the numbers mean if you're not 100% sure. But eventually, as you meet with your advisor more, the numbers will start becoming more clear to you. So is my business actually more profitable? So let's say you're doing a business review, a mid-year review currently. Is your business profitable? So revenue does not equal profit. You have to look at your revenue, but you also have to look at your gross profit, at your net profit, and any major expense increases. Because yes, you can definitely see that your revenue is increasing, but are you looking at how your expenses, if your expenses are increasing at the same rate as your revenue, then your bottom line might still be the same or less than prior year. So definitely you have to look again at the entire picture. If you see that your revenue is increasing, your expenses are most likely increasing as well. So you have to look at both of them at the same time. So don't confuse growth with success. This is very important. You have to look at your gross margin, look at the percentages, make sure that you are definitely running a successful business, not a business that is simply growing, but where everything is growing, the revenue, the expenses. You have to look at the market, right now it's a tough economy. The prices are super high. So again, maybe your revenue is increasing a little bit, but maybe your expenses are increasing a whole lot. So you have to look at that. You can even run a report right now and compare it to where you were at this time last year. And I can assure you, most of the businesses, the expenses have definitely increased. But you have to take that in comparison with how much has your revenue increased, because you have to make sure that even if your revenue is increasing, that you have a successful business, not just a business that is growing in revenue from year to year. So is my cash flow healthy? Again, a lot of business owners look at their bank account every single day, and they see that they have a large balance in their bank, and they see that, okay, I'm doing great. But you're not looking at the entire picture. The bank balance doesn't define your business, doesn't tell you if your business is healthy, because you need to look at what expenses are coming up or due. You have to look at, for example, you have to look at your collections. You have to look at your AR. Do you still have a lot of clients that owe you money? And how long has it been? Has it been more than 90 days? Has it been 6 months? AR, cash flow is king. So don't get me wrong. You have to have good cash flow. You have to have a healthy cash balance to run and to maintain your business. But you have to look at your AR very carefully. That I will definitely look at every single week, just to make sure that you are definitely collecting on those invoices and that you're taking action. Just know that if you have, for example, if your industry is a contracting industry, and you have a lot of clients that still owe you money, but you have to keep getting paid, right? To buy more inventory, to make sure that you are covering all of the costs for your business. You have to make sure that you're collecting on every single business that you're owning. And if there's some things that you think that it might be uncollectible, I would definitely call an attorney or call a third party that will help you collect into that. AR is definitely a big thing that you should be looking at every single month. So are you also paying more taxes than necessary? So again, if you are a successful business owner, if your business is successful, you are going to be paying taxes. That is the truth. But are you paying the taxes that are necessary for you to pay? And if you don't implement strategies throughout the year, that's exactly what's going to happen, is that you are going to overpay in taxes that you could have saved if you would have implemented this strategy. And the mid-year review is exactly where you start that discussion with your advisor. What strategies can be implemented now? Because if the business keeps going the way it is, or the way I projected through the end of the year, this is going to be my net profit, and this is approximately how much I have to pay in taxes. So again, not that paying taxes is a bad thing, but you have to pay definitely the taxes that are necessary for you to pay. Don't overpay. You don't have to. That's exactly why we have advisors, and that's exactly why we have strategies, and they're all legal. So you have to make sure that you take advantage of them. So you have to review also estimated taxes. The mid-year is the perfect time of the year to see if you have already set up an automatic payment plan, estimated taxes payment plan to the IRS, to the state of Florida, or the state that you live in. Take a look at those estimated taxes and see if you have to make adjustments at that time. Do I need to increase it, or do I actually need to decrease it and keep some of that cash in my pocket because I expect this, or that, or because I have decided to implement this and that strategy, and therefore my net profit is going to decrease, and I'm going to be able to pay less in taxes, and therefore I can lower my current estimated tax payments. So the best tax strategies happen where there's still time to act. And again, the reason why we definitely recommend a mid-year review, and the reason why all successful business owners, believe me, they do this review. They do it because they know how important it is. You have to make informed decisions during the year and not wait until the year has come, or if it's too late in the year. So is my pricing still right? That is another question that we look at in our firm, and we always bring this up to our clients. If you started your business 3 years ago, for example, we know how expenses and how the cost of living has increased, especially in the past 2 years. So are your prices for your items or your services still the same, or have you increased them to follow the cost of living increases? And you have to think about this. If you were going to open your business today, would you still be charging the prices that you're currently charging, or would it be higher? So definitely this is something that a lot of business owners do not necessarily look at, but it's very, very important. A lot of business, again, don't have an expense problem, but they have to look at their expenses as well. They have a pricing problem. Sorry, that's exactly where I was going. They don't necessarily have an expense problem. They have a pricing problem. And the reason is because expenses have been increasing due to the increases in the cost of living, but the revenue or the pricing, based on the pricing of how much they charge for the services or for the items, they have kept it the same as expenses were growing. And therefore, you see your net profit getting smaller and smaller every year. But the pricing you can make changes on the prices today. There is no need to wait. So if you see your net profit kind of decreasing every year, this definitely pricing is one of the first things that you should look at. So am I measuring the right numbers? Don't manage your business again by the bank balance alone. You have to track the gross margin, the net profit, accounts receivable, and revenue by service. What gets measured gets managed. And I know I spoke to this about earlier in this video, but it's very, very important. And I say this to my clients all the time. The financial statements are telling you a story. Are you understanding the story? Do you understand what a gross profit is? What gross margins are? Are you looking at those numbers? It's something that you don't have to do alone. Your advisor should be working and looking at that with you. And the mid-year review is the perfect time of the year to do that. You're still on time. So is my business prepared for growth? This is another question that we definitely ask our clients. Because are you planning to hire? Are you planning to expand? Are you needing new equipment? Or are you thinking about maybe making an investment in real estate, maybe buying your own office? So make sure that your finances can support that goal. So mid-year review obviously is not only to help you project through the end of the year for tax planning opportunities, but it's also what are your goals and where do you want your business to go? And are my finances able to support that? This is definitely a great conversation to have with your advisor. And it can be your tax advisor, it can be your financial planner or your financial advisor, it can be an attorney, depending on what the goals are. But again, don't forget that running a business, you have to do it with a team of people that help you with your business. So something else that we recommend as advisors to all of our clients is that you need to have a good relationship with a bank, for example. You have to have an attorney. You should have a financial advisor, an insurance agent. You have to make sure that that you have a team that supports your business and the growth of your business, and that will help you accomplish those goals that you have. So, growth without planning creates chaos. Definitely, we can all have dreams, we can dream, we can know what we want, but you have to plan. You have to plan every time in order to be able to reach your goals. Because if you don't, as I said, it's going to create chaos, it's going to be all over the world, and you are going to be lost, and you're going to get lost in the whole planning if you're not organized. And we definitely do not recommend that. So another question, is my business helping me achieve my personal goals? This is another important question, because you also have to look back. When we open a business, we all think that we're going to be successful. We all think that this is where we're going to retire. This is going to be great. But if you're running your own business, but you're not spending enough time with your family, and you're always stressed, and you're always in a bad mood, and you are not taking a vacation, is it really worth what you're doing? So definitely it's something a little more personal to think about, but you have to make sure that, the reason why you started the business, and is it giving you the financial freedom, the time, the peace of mind, and the wealth that you want. If it's not, then you have to reevaluate everything, and you have to make changes. What do you need to change? to reach those goals, to be able to take a vacation, to take time, to take, have you built a good team around you in your business, so you have that freedom to do those things, to do those personal things that you still want to do. So your business should always support your life, not consume it. So again, a mid-year review after looking at your financials, after looking at exactly what happened the first 6 months of this year specifically. Where are you in your personal life? For example, so it's mid-year reviews is the perfect time to look at the entire picture compared to where you were mid-year last year, and then see where you were at now. You also have to think about, especially when you're planning, when you're looking at your cash flow, there are businesses that are seasonal. We are an accounting firm. We are definitely a seasonal business. So we have to plan our cash flow way ahead of time. Now is the perfect time to look at it. We know that the summer months, for example, is a slow season, but then it starts to pick up September and October, and then again it becomes a slow season in November and December. So you have to make sure that you have enough cash flow to support those months where the revenue definitely decreases because your business is seasonal. So this is part of the planning opportunity. If you have a new business, sometimes it's hard to know when the business peaks and then when it goes down, those months where you peak and those months where you go down. So you have to maybe have meetings or do some research with other businesses like yours to understand it better. But if you have been running your business for at least 3 years, 5 years, and obviously longer than that, by now you definitely know where your peak times are and when your time it's lower. You can definitely see that. You can run reports in your accounting software that will tell you that information. So that is something obviously that you plan at mid-year as well. This is where we're at now. We know that we have 3 months of slowness coming up. Do we have enough cash flow to cover the expenses for those three months where the revenue goes down? So this is something very important for you to look at and to speak to with your advisor to make sure that you are covered. Planning gives you a peace of mind. I cannot stress that enough. If you plan ahead, and if you know your numbers, and if your numbers are clean, and you know that you have good financial statements, and you know that you can rely on those numbers, it's going to give you a peace of mind because you know that you'll be making decisions, that you will be making informed decisions. Again, you don't have to do this alone. That's why you have an advisor to help you. But planning, believe me, gives you a peace of mind. So again, a mid-year review is not about looking backward. It's about making adjustments while you still can. The businesses that succeeded, they review, they adapt, and then make informed decisions throughout the year. So the decisions you make today will determine how your year ends. Again, my name is Carla Carderera, Managing Partner at UpFront CPA, and I'll see you on my next video.